Today's guest is Nick Amelexon, and I'm so privileged to bring him to you today because his accomplishments span from starting in real estate in 2015 with just single-family homes to being a successful multifamily investor of over 100 units in one of the hottest markets, Austin, Texas, in less than a year. Wow. If that doesn't make you want to jump into this episode, he talks to us about how to get credibility, how to partner with people and add value so that you can bring to the table what you're actually good at, and focusing on that and not going, oh, I want to do this all alone. Multifamily is a team sport. We say if you want to go at it alone, you can go fast, but if you want to go at it far, you got to go together. And that's what we really learned in this episode. This is a great real estate podcast for those people, those aspiring investors, including me, who want to get into the space, who want to listen from someone who was in your shoes maybe a year ago and how they did it. And so I really, again, am very privileged to introduce Nick Amelexon to all of our listeners today. And I hope that you get as much value out of this podcast as I did in recording it. Thank you so much for being with us today, Nick. We really appreciate it. Tell us a little bit about your focus, kind of what you focus on particular, and how you got to us today.
Sure. Well, first off, thanks for having me. Super excited to be here. I've watched a lot of the shows so far. They're going great. So we focus in Austin and LA, B and C class properties, between 20 to 100 units. And I really started out on this multifamily journey about September of last year. So I've been investing in real estate since 2015, but it was around September last year where I decided I kind of needed to take that to the next step and start to scale up. So that's kind of what led to this.
So tell us a little bit about kind of what you said you started investing in 2015. Mm-hmm. How'd you get into real estate? How did you view it as an asset that you wanted to invest in?
Sure. So I actually fell into real estate. At the time, I was very much a stock investor. I thought that's where I was going to be. So that's where I focused most of my time. And at the same time, I had just bought a single family house, and I learned a pretty good lesson, I guess. It was harsh, but good lesson starting off with stocks. When I realized that, a company I invested in that I thought I knew, almost halved in value overnight. And, that was a huge wake-up call. And at the same time, I had just started listening to the Bigger Pockets podcast. So I was like, I just bought this house. I just gotten this really great lesson about control on your investments. And I thought, okay, well, I can buy a house. I can see how that works. And that's kind of how I fell into it. We ended up renting that house out and then buying a duplex and house hacking for a while. And then, buying more single family from then on, and then, eventually into multifamily.
So what was the switch? So there's a big argument that single family homes are a great investment. And because you can get them in some areas, depends on where you live, but in my backyard, you can get them for $40,000, $50,000 and get crazy returns on them. What would you say to someone who says, you know what, I want to do that instead of getting in the multifamily? Why did you do that?
Well, a lot of it personally was scale. I also enjoyed single family. They were always rented, never had any huge horror stories. We had some bad tenants, but nothing too bad. As far as risk goes, I would almost view it as riskier. You get 1 month vacancy, and that can clean out your cash flow, at least out in my market for the year. So that was something that kind of worried me about scaling up. But then also it got to the point where I knew I wanted to do more in real estate. So I kind of weighed it. Am I going to build this team to find off-market deals, do all this work to get a single family, 2 or 3 single family, buy and holds a year? Or should I put all this work in and get one 50 unit complex or per year? and for me, that's just why I kind of transitioned out. I think it both have merit. I would almost view single family as more risky, at least in the areas I invest in, because one major expense, 1 month vacancy, you can get completely cleaned out.
Okay, so maybe it's easier to get into and getting some comfort in, but scaling up, yep, it's always an issue. And it's, if you can get past that initial mindset switch from I want to invest in single family because it's easier to, I'm going to be patient, I'm going to be disciplined, and I'm going to have the wherewithal to look at 150 deals in the, how it is in today's market to find a good one, so that I don't have to worry about that risk of having 2 months straight vacant.
Yeah.
So tell us about a deal, maybe your first big deal. So you're thinking about arming up. You're excited from going from a couple of single families into a duplex. Tell us about the first deal. Where was it? A little bit about the financing and how you got the money to invest.
Yeah, so I guess the first real deal that I kind of spearheaded, because I was invested on a 12 unit in Atlanta through a few people in the Wheelbarrow Profits group. That was kind of like a smaller role. So the first deal in Austin would be this 53 unit we closed on in August. And that was just found through a broker connection. We got it, right before it hit the market. So it didn't end up actually being listed, but we were able to move pretty quickly on it. So I think that was kind of key. And yeah, I mean, to get to that point, we had looked at, I had looked at a ton of deals, and then my partner and I started looking at deals together as well for a while before we got our first offer accepted on the 53 unit. And then financing, it was a pretty stabilized asset as far as like vacancy and all that goes. So we were able to qualify for agency. So we just went with a Freddie small balance, and it worked out perfectly. I wish we would have had today's rates now, because I think we're at like the fours. I think we ended up closing at like 4.8. So that would have been nice, but and that was just a JV one. So we didn't actually raise any money on that. It was just my partner and I.
Okay, so it was a JV. So what return were you getting on it? It was a stabilized asset. What's your business model? Is it a value add business model? And how did you look at the property? There are a lot of properties, a lot of off market deals. What made you feel comfortable about investing in it?
Yeah, so it's definitely a value add. That's kind of the business plan we have going forward on most of our properties. We haven't really done like a momentum play. And a lot of that is just the markets we operate in. They're very competitive, very low cap. And that's where we see the best ability to increase our returns, is finding an underperforming asset. So this kind of fit all of our criteria. It was, between 20 and 100 units in a great area. It was kind of the last one to be renovated for the area, especially of that vintage. So, we can see, especially because there's a lot of new construction and things going on in Austin all over, but especially this little pocket where we bought. And so a lot of the product nearby, it already kind of proved the concept. They've taken these older properties, they've renovated them, they're getting these rent bumps, and we saw that we can do the same. And so that's kind of our business plan, is to obviously we're going to do slightly better unit turns, refresh the outside, and then really go after those premium rents.
Okay, so you saw that the concept was already there. You felt comfortable about the market. You knew that the return would be there, but you said you bought. What cap rate did you buy it at?
So that was a 5.5.
Okay, and how did you make sense of buying it at a 5.5 cap?
Well, a lot of it had to do with, like we said, the area. We could see what our units that size and that condition are trading at. So we knew right away we're about 10% below market rents of that quality. Now we can go ahead and force the value higher, because renovated products, renovated and upgraded units of that age, we're already getting around 25% higher rents. So there's a lot of room for us to make up. And that, gave us a lot of confidence.
Excellent. Wow. Tell me a little bit about what after that 52. So you went from, if we're following you, 2015, you started to get a little bit of momentum. You started to get a taste for real estate. And then last year, September, you said you went in, or you started investing in multifamily. You got a 17 unit in a partnership deal. And then after that, you got a 52 unit. I want the audience to see kind of the progression from how you can scale from, oh, I'm getting a couple of single family homes until 17 to 52. And we were talking before, tell us a little bit about what's going on in your pipeline right now.
Yeah. So depending on when this airs, we'll probably have closed on our next deal. We're supposed to be closing next week on Tuesday. So very excited about that. 71 units in Austin. Fantastic. And then we just removed contingencies on our third deal in Austin. So that'll be closing hopefully November 19th.
Wow.
So we have another 130 units coming online this year.
Excellent. And so let me ask you, this is something that a lot of our listeners, again, they're new to the game and they want to understand. You have a partner. You've referred to we many times. And
Oh,
a
yeah.
lot of people are told to, syndicate or find someone who is experienced to get in with. What value, first of all, can you tell us about how did you find the partnership? Number two, what value do you bring to the partnership? Maybe you could provide some mental models for our listeners.
Yeah. And I do say we a lot because multifamily really is a team sport. That's one thing I learned right off the bat, and that's personally will probably help me back from investing in multifamily for a long time. I had heard Jake and Gino on the podcast 2015. I think I heard them in Bigger Pockets. And I had started looking at apartments at that time, but I just wanted to do it myself. I didn't want to bring other people on, and that held me back. So when I say, it's, I wouldn't have gotten to where I am without, my partner. And I think that's a huge lesson. And one thing that I started to do when we joined, when we started looking at multifamily, was just network with absolutely everybody I could. So the first thing I did, and apparently Bigger Pockets is starting to crack down on this, but I went on Bigger Pockets and I found everybody who had like syndicator next to their name, especially in my area, and just reached out to them, just saying like, hey, my name's Nick and I'm an investor in this area and I'm just looking to learn a little bit about more, if I can add any value, basically just trying to reach out, see if I can help them at all, but then also, like just connect, just to kind of learn, as much as I could. And then also to provide some value to them. I wasn't sure what that value would be at the time, but even if it was just getting coffee, I would be more than happy to. So that's actually ended up how I met my partner. Was actually we connected over Bigger Pockets and just kind of snowballed from there.
Okay, so let's go from right there. So you met your partner, reaching out, said what value can I provide to you? But did you really have that much value because you were in single family homes and duplexes and had a 17 unit, I imagine at that point. What was your value proposition?
Sure. Well, on that one, and most of it, I live in a great market. I live in Austin, Texas. So, people want to live here, people want to invest here, but one thing we always hear is it's either too complicated or too expensive. So the value I bring is that I can be present in the market. I'm starting to establish relationships with brokers. I can go and look at a deal in 30 minutes versus somebody who's out of state trying to invest in Austin has to either fly out here to look at a deal or trust people in the market that, other brokers or, somebody who has potentially an ulterior motive or their own, slice of the pie they're trying to get. So that was kind of the value I could add is I was already looking at deals in Austin. So, if I could find a deal, I knew I would be able to hopefully find someone to invest in it. And that's really what I was looking for is I was starting to look at deals, but I needed to find, some way to qualify for the loan, to take it down, and also, you know, to have some help, because there's a lot of moving parts, even on the acquisition side. But even once you take it over, you know, and you start managing the asset, even if you're using third-party management, that doesn't mean like you walk away. That's when that's when the game actually starts. So that's kind of the value I bring, at least to our Austin properties, is, you know, boots on the ground, and you know, can help manage the property.
Yep. So what I'm hearing is that you found something that you can contribute, and you actively pursued it. He took action, guys. That's a big one. And you reached out to people and you said, hey, listen, I want to come to you as a giver. I want to come to you as a person that wants to improve your business.
Mm-hmm.
Not soliciting, you know, reciprocity right away, but soliciting, let's build a relationship and let me give to you first. I mean, who's going to be like, you know what, Nick, sorry, I don't want you to help me out.
Yeah.
Very few people, if you come out with a really open mind and a really open heart. That's awesome.
Yeah, I would say my success rate on reaching out to people is probably around like 95%. Like it's not only is it a great industry to be in, but if you come to people like that with just, you know, how can I help you, they'll at least engage you. You know, you're not trying to be like, oh, can you help me off the bat? It's, you know, how can I help you? Because that was really what I wanted. I know that, you know, at least through, you know, past experiences, helping others is really a great way to learn as well. You know, I don't need to be doing anything monumental, but even just little tidbits help a ton.
That's a good real talk tip right there. Perfect. So we got to the 62 unit. Tell us a little bit about what your next 12 months look like.
Yeah. So next 12 months, we're really working on getting these 3 properties stabilized, getting our renovations underway. It's already starting at our first property, so that's going well. And from then on, just trying to continue to grow in our markets. You know, we're starting to look, like I keep saying we, but my partner's out in LA, so we're starting to we're continuing to look at properties out there, and then Austin as well, and really building our investor base, because that's one thing we want to do moving forward, is do more and more deals, hopefully, you know, 3 to 4 a year. So to do that, we really have to start bringing in different sources of funding.
Mm-hmm. You know, I want to just really backtrack. One of our last podcast guests, Nick, his name is Jens Nielsen, and he has this great quote in our podcast, and he said, who do you know that you could refer me to? And that opens the discussion. And who do I know that can help your business out? I just want to highlight that right now, to just kind of, it was at the top of my mind. So you're looking to stabilize your assets. You're looking to continue to build your portfolio and build your investor base. Mm-hmm. What's your plan for building your investor base?
Yeah, so we've got a lot of pans in the fire right now on the investor base side. Big thing right now is just getting, you know, we have our website up and running, but also kind of finding a better way to add value to people who come to reach out to us. We're getting engagement on the site, you know, we're reaching out to people and having conversations, but how can we really provide them with something where they walk away and they go, you know, not only are these guys knowledgeable and experienced, but they also just want to help, because honestly, that's what we want to do, right? We invest in real estate and want to bring on other investors so we can help, you know, not only grow our portfolio, but grow their portfolio, you know, and really start creating some great returns for people. So how can we show that to people, you know, obviously for free right off the bat? So that's what we're working on right now, is just kind of generating some content to provide people with value.
Yeah, it's such a giving business, man. It is such a giving business, because at the end of the day, you're asking people to invest in you and in your business, but it's the best investment you could possibly make. I mean, it's tax efficient. It's not going up and down because something happened with an emission test. You know what I mean?
Yeah.
It's completely
Yeah.
controllable. And so it's like doing them a favor. It's like, hey, let's talk. Let me introduce, let me provide value. But I'm doing you a favor. So I love that.
Yep.
So what are some of your limiting beliefs that maybe you started out with, to give us a little bit of context on your journey?
Oh yeah. Wow. Limiting beliefs. That's a big one. I think probably the biggest one I had was, I could do this alone, or not only I could do this alone, I should do this alone. For some reason, I had this very real fear of reaching out to people. And it was significantly holding me back. So once I kind of realized, like, okay, you need, more people, the right people can help you go further, faster. That was a huge limiting belief that I've had. And then the other one was, that I could do this. Like, part of me was like, I can do single family because everybody's doing single family. Everybody can start out and buy a house, right? That's a very attainable goal. But when you start thinking like apartment buildings and complexes, you're like, oh, that's for, I don't know, very advanced type of people. That's for, master students and, people who have just been like crushing it their whole life. That's not for me. Like, at the time I was a technician, I worked for Volkswagen. That's stepping way outside of who I am.
Yeah.
Which is crazy because, most people in this business, are fantastic people, and some are incredibly smart and talented, and some are, just very hard, dedicated workers. And that's kind of where I guess I would label myself as like the hard worker. I wouldn't consider myself smart or talented. But just that was kind of holding me back. Like, how can I compete on the same level as, the greats? And then it just turns out it really is just dedication and repetition. But that was a real big kind of holding me back.
I just had a thought along the same lines that, I don't know where this quote's from, but if you want to go fast, go alone. If you want to go far, go together. And that is such a great analogy for real estate. I mean, think about it. Single family homes, you get the cash flow fast. You do. And maybe you get cash flow quicker than you're going to get more deals under contract. If you go alone, you do single family homes. But if you want to go far, if you want to build generational wealth, if you want to build tax efficient portfolios, if you want to help other people on a world national stage, you got to go together. You got to go bigger. And that's why I love this multifamily niche, and I love the people because it's so big. Your limiting beliefs was, I should do this alone. I have that same limiting belief. Yeah. But what's so incredible about it is that when you get over that and you said, let's share this pie, because man, this pie is big.
Yeah, exactly. Yeah, there's more than enough to go around.
Okay. So I want to, you said something really interesting earlier on, and I wanted to jump into it. How you said, now that you're starting to have a presence in Austin, how have you built your relationships with the brokers? Is there anything that you've done particularly that you're like, yeah, like that was a really good thing that I've done?
Not really. I mean, a lot of building relationships with people and brokers especially is just doing what you say. So if they send you a deal and you say, I'm going to look it over, give them feedback, whether it works or doesn't work, and then just follow up. I mean, a lot of it, it's not rocket science, right? They're busy people. You're not going to get their best deal the first time you meet them. It's just sounding credible, doing what you say, and then following up. Now, I will say on the first couple of times I toured a property with a broker, if it was like the first time I interacted with them, I sent follow-up, like thank you letters. I don't know if that really helped, but it did help with our first deal. So that might work. That might just be coincidence, but and so most of, all of our properties have come through broker relationships. I I think that's one of the most powerful ways, at least in our market, to find properties. I'm sure there's people who go off market to sellers directly.
Yeah.
For me, it was just a time thing. You know, I have to leverage as much as I can. So I'm leveraging the broker's relationships with all the sellers that they already know, rather than trying to develop, tons of relationships with a bunch of sellers in my market. I'll develop one relationship with this broker and kind of leverage their credibility with their own sellers.
Mm-hmm.
But it wasn't rocket science. It's just being on top of them, being polite, and being credible.
Right. I mean, you know what? It's kind of weird, but most of life is really simple. And multifamily is this big, ugly monster because it's hard to get into. But it's just about follow-up. And if you continue to follow up, the fortune is in the follow-up. That's where it is. So let's take perfect along those lines. Tell us, like, if you were back 22, 23, 21, really early, I mean, we're talking at the beginning of your time as, a single family home. What would you tell that 22-year-old self about getting into multifamily? I'd love to hear that.
Yeah. So, man, back then I was still in Denver. I would tell myself to buy in Denver.
When was that?
That would have been, 2010, 11. So,
God.
Yeah.
You wouldn't have had enough time in a day to talk to me on a podcast.
Right. That would be it. I would not buy in Denver, but just that it's possible. Even back then, I completely limited myself on what I thought I could achieve. And, that's maybe just a personality quirk of mine, but I feel like a lot of people struggle with the same thing. So knowing that, you can achieve it. And it's probably so cliche because I heard that on a billion podcasts, and I think it really took a lot of repetition to really figure that out myself. Because I feel like everybody says that, and you're like, yeah, sure, of course you can. But yeah, it's achievable. It's just action and repetition. And age is like not a barrier. That's just something you get over. Like, I have a face that looks like I'm 14. I get that all the time. So that was one thing I struggled with. It's like, meeting these brokers, they're going to think, who the hell is this kid? And maybe they did at first, but it's just being credible. So even back when I'm 21, like there's people much younger than me that are doing way better. So just there's no excuse.
No excuse. It's completely possible to do it.
Yeah.
Mechanically, what would you have done? Let's talk maybe a little bit more tactically. Would you have gone out and read a bunch of books? Anything in particular that you felt like, I love the concept of Tony Robbins, Nick, that he says, let's collapse decades into days. Let's really crunch that time, because there is a certain amount of time or some information, knowledge that you can get that disproportionately leverages, disproportionately changes your mindset. Anything that maybe would be of any value to our listeners?
Oh man, if I had to go back mechanically, I like that, decades into days. That's nice. That would have been a huge part. I didn't really start hitting the education side of this till about 2015. So probably getting into it a little bit earlier, but also taking action. I love learning. I think you need to have a good knowledge base, but you need to couple that with taking actionable steps, even if you feel like you're not ready, because that's where I really started to learn what I was reading. Because you read and you study and you listen to podcasts, and then you go out to do like your first property tour or your first talk with a broker, and you're like, oh, I just forgot everything I just read. And I'm actually going back and rereading almost every book that I read starting out, because now I'm like, okay, at least I'm finding more and more nuggets of like things I read and glossed over or didn't think was applicable to my situation at that time. So I think, finding obviously knowledgeable people and getting as much knowledge as you can, but then also take some action with it at the same time. Really start utilizing that, because it doesn't help to read 3 books on the same subject and then 6 months later you still haven't taken a step on that.
Yeah.
So I would hopefully go back and tell myself, like, start learning and implementing. Like, when you learn something, try implementing it, see how it works, and then, you know, learn a little bit more and implement a little bit more.
Right. This is another kind of reference to Tony Robbins, really big mentor of mine. I'm actually going to UPW in Miami
Nice.
in 3 weeks. Really excited with my partner. And he has this concept that, you know, right away, as soon as you learn something, doesn't matter. Stop reading and do it. So I've literally been reading books, and this has been hard for me, and I hope our listeners take this seriously. I literally been reading books, and I literally stop at 7:30 at night. I just call a broker, and I know I'm probably not gonna get a hold of him or her, but it's the fact that I did that. It's like instantly you're taking action.
Yeah.
And you have that level of certainty right there. And that helps build that subconscious belief system that you can do it.
Yeah.
So
exactly.
What comes first, the money or the deal?
Well, that's a tough one. For me, it was, I guess I started with the deal. I don't know if I took a normal path or not, but a lot of it was when I started looking at deals, you know, and wanted to start making offers, I knew, like, I couldn't take these down myself, right? The level I was looking at. So I started sending these deals that I was looking at and had underwritten and toured to people who I thought would be interested. So I guess starting looking at deals came first, but really once I had the confidence, you know, once I started getting people engaged with, okay, this is what he's looking at, these are the deal, like, these are good deals, you know, then we actually had I personally had the confidence to close. So I guess hand in hand, I know that's not really a popular sentiment, but that's how it worked out for me.
Or just take some dang action and figure it out. Okay, I hear you. So we're coming to the end of the podcast. We're going to jump into the Real Talk Real Estate Lightning Round.
Oh.
So what is your real estate superpower that makes you a deadly investor?
Oh, I'm very analytical. I love getting into the numbers. I love just really deconstructing a property and then seeing, you know, where the inefficiencies are and where the possible efficiencies are, you know, where we can take it. So I love it. I could spend all day looking at spreadsheets.
Oh, okay. You want to trade places? Maybe help me find some.
Let's do it.
And I hear that. In that, you know what? Guess what? That's why multifamily is a team sport, because someone brings certain things, and that's invaluable. So what's your number one real estate investing book that you would recommend?
Oh, wow, that's a tough one. I think what is it, the E-Myth? I know it's not really a real estate investing book, but I think that's really applicable to, you need to create systems and kind of take yourself out of it, so you can focus more on growing. And I think that's huge, because you can get really lost in the day-to-day minutia if you don't have, like, guidelines and ways to operate.
Mm-hmm. E-Myth, that's a great book. So what's your Real Talk best mindset tip?
If you start feeling like uncomfortable or anxiety, like when I started going to Toastmasters, right? This is just the most recent example. I remember the first day I was sitting outside in the car, and I was like, I could feel my brain rapidly firing reasons why not to go inside, you know, and you can rationalize anything. And I think if you hit that point where you're uncomfortable, your brain's telling you a million reasons why you shouldn't, like, take the next step. Because, like, you're moving away to go back into comfort, and ultimately you're going to feel horrible about it. But then also, like, the growth is on the other side. So and I know people say that a lot, but once you start feeling that, like really ask yourself why am I telling myself all these reasons not to do something, and then take action.
Awesome. That's good stuff.
Yeah.
It happens to all of us, and it continues to happen. So you better find a good way to handle it.
Yeah.
So what's been your biggest challenge in real estate, and what have you learned from it?
My biggest challenge has been, I guess, perceiving myself as credible. And what I really learned from it is, credible people are people who do what they say. So, at least in my opinion. So don't overpromise and underdeliver. And really what I've learned is, like I feel like I've repeated this 40 times this podcast. Just do what you say. That's the number one thing I would say is really just be a person of your word, and that'll carry you pretty far.
Man, I mean, I'm going to be honest with you. You might repeat it, but who's gonna dispute the amount of success that you've had in the multifamily space? You know what I mean? And I'm sure that a lot of you can attribute that to doing what you say you do. It's not rocket science. It's really not. It's saying that you're going to call someone on Tuesday afternoon at 4:00 and calling that broker and telling them, "Hey, what do you got for me?" We work together. And then following up when has a deal, he sends it over. In disproportionately favoring that side of you, that personal belief that you're the type of person who does what he or she says that he's going to do. Phenomenal. Yeah. Phenomenal. Awesome. So before we ask you your last question, where can our listeners and how can our listeners get in touch with you?
Yeah. So I can be reached pretty much anytime. Email is usually the best. And that's just Nick, N-I-C-K, at quantumcapitalinc.com. And then also you can reach out to us via our website, quantumcapitalinc.com. Yeah, we're always available. So
cool. So what's your real talk best tip for someone who might not already be in multifamily investing, but needs a little bit of boost, needs a little bit of help? That could be valuable.
Man, my number one tip would be start just networking with people in the area you're interested in. I mean, there's so many free meetups. There's so many like websites where you can, like Bigger Pockets, Facebook, where you can just start networking with people. Because I think once you start building that community where this is the normal, this is, that the actions you're taking are in line with, the people that you're interacting with on a daily basis, that's huge. So just start networking with people. I think that's probably the best action tip I would give somebody in the area you want to be in.
If they don't know you, they can't flow you. Greg Cardone.
There you go.
I love Greg Cardone, man. I'm a sales guy, so I really resonate. Well, Nick, oh my gosh. I say this. I swear I say this on every podcast, but I mean, I'm okay with just this podcast is so much value in it because it really teaches someone to say, okay, I'm starting from here. I'm starting from single family homes, and it's possible if you find a partner, if you think that multifamily is a team sport, if you take action, if you network, and finding the deal, not finding the deal, finding the money, not finding the money. If you stay consistent and you do what you say you're going to do, maybe you'll be giving us a call and saying, I have 350 units in 2 years.
Yeah, it's definitely possible. Definitely possible.
Nick, thank you so much. It was a privilege to have you on today, and hopefully we can get you on sometime in the future and hear about how you're taking control of the entire Austin market.
Yeah, this is great. Thank you. Great time.